with that, I will go ahead and kick things off. First, again, thank you to everyone for joining. Really excited for the opportunity to share really a different approach to core transformation, digital transformation, more of the holistic approach. So for my section today, it's really, how to go through the process of a core transformation, some of the different strategies that are involved, and a little bit different approach to probably what you hear out there in the industry, talking to other partners of yours on, core is not just a fax machine. It's not a set it and forget it type of solution. It needs to be nurtured. It needs to be thought about in an innovative way, in a more strategic way. So we'll walk through a couple of those different strategies and options and have you think differently about the business. But by way of introduction, I'm Jeff Ostheimer. I'm the Director of Fintech Advisory Services here at SRM. Again, really excited for the opportunity. I've been with SRM going on 8 months at this point. And, so really focusing on transformation and just advisory and strategic advisory around core banking, digital banking, and then all the ancillary services that go with that. I've spent the last 20 years in fintech. So I've been in fintech my entire career through different startups, worked with the largest, second or third largest fintech provider globally, focusing on helping institutions think through these different strategies and results and driving a lot of bottom line business, revenue opportunities, cost savings opportunities through core and digital transformation. So really excited to do that. In SRM as a firm, we have offices here in the US and in Europe. So we take a global perspective to this innovation and have a really good understanding of what's going out there in the industry. So with that being said, I want you to think a little bit differently today about core than you typically would. We really need to take a holistic view and get a good understanding of the strategic direction of the organization. And that comes in a lot of different ways. It's, doing deep discovery, understanding if we had to open up the paper in 5 years, what would it say about the institution? Understanding that direction will help us to align your goals and objectives to the engagement so you can make informed technology decisions, break down the silos of communication and the way we've always done things, and prepare the organization for this type of change. We were talking to a bank the other day that had put a code name to the project internally and put a internal marketing spin around it to drive the need for awareness of the project and really preparing the organization. Because really what the goal is of a core transformation is to future-proof the business going forward. And thinking of it in those terms is always it's unique, it's tough to do, but we need to think of this as a core transformation or even a renewal. This is a 20-year decision, not a 20-year contract by any means, but think of this as a long-term decision. Also, I like to always advise, this is not always a technology decision. This is more of a business decision. So when you align your goals and objectives to that model, it really helps facilitate a really great engagement. So along those same lines, we need to see all angles of the opportunity, be mindful of the full impact that we see. So what I mean by that is we have this modern core banking platform in the center. Think of that as your core system, but where the current environment, the current state, but we're thinking about the future state. So this is the end result that we're all aiming for and looking for. And what is a core supposed to do? And in its simplest form, it's supposed to unlock data when you want it, how you want it, and at a low cost at scale, primarily focused on business intelligence. So when we talk about modern core, that usually has the same lines around APIs, modern languages, and modern ways of accessing your data to drive actionable insights and make business decisions based on that data. So a lot of core platforms have really invested heavily in their API manager or their middleware. And we'll talk more about middleware as well, but how to do more modern API languages, because that's what these fintech providers, point solutions or widgets are communicating with. It's hard to do that in the legacy format. So how can we work with you to make sure that your core provider is offering you this 100% access to the data in a modern way, so that these systems like AI and chatbots can leverage that data and drive more efficiency through the organization and help you make more or better business decisions with that. And possibly even monetize your data, which is another business opportunity for financial institutions or business models, non-fee income to think about. But additionally, we understand and recognize with the number of engagements and the number of institutions that we talk to, that the system of engagement is more important these days than the system of record. And that system of engagement is, historically speaking, online banking and mobile banking. So being able to reduce friction and integrate a consistent approach and a consistent experience across all delivery channels, online, mobile, call center, chat GPT even is going to be another delivery channel we need to think about, the branches, etc. So, having a frictionless experience, and it's not just a slick UI or UX, it's less friction all the way through also to the back office, which is kind of highlighting why we have the modern banking platform at the bottom and the center of the slide. Everything touches the core. And one area that we would like to focus on is, how do you measure success when it comes to the core platform? And, in the demonstrations, there are any number of KPIs and measurements to consider, but we always like to look at account opening. Account opening being not just online account opening, but also branch account opening or through the phone or call center. So being able to have a harmonized process through all the different products that are most important, leveraging again business intelligence and those the system of engagement, and seeing which products are the ones that we need to focus on the most to have the less friction going forward. And we'll talk a little bit more about products, but if you can measure my current state of account opening to my future state, if I can take a 45-minute process or 40 minutes to 10 minutes, even for the most complex commercial relationship, that's driving efficiency. And that's, showing that it was successful moving to a new platform or just optimizing the platform that you have and investing in that. A couple other ones would be like Reg E disputes or leveraging workflow automation. If you're on a Microsoft-based system, you could leverage maybe the tools Microsoft offers through like Microsoft Workflow Professional. Or if you're on another platform, you can bolt on like a Flow network or something, or Flowable, to be able to modernize your workflows to drive more efficiency, spending less time doing redundant compliance tasks that occur. That's one way. Another area of focus that's really unique to us and important to our clients is how we view payments in relation to the core platform. I would have to say, the introduction of FedNow, Zelle a couple of years ago, the CARES Act with the PPP program coming out of COVID, or as a direct result of COVID, has really facilitated many institutions looking at the holistic view of their technology stack in relation to core digital, but also the payment side. So how do we have a modern platform that's not a monolithic architecture to be able to consume and ingest new modern ways of sending money through real-time payments or real-time bill pay, P2P, A to A, other treasury functions as well on the business side. So we want to be able to future-proof the core platform so that for the next innovation that's coming down the pipe that we don't even know about in the next 10 years, that we know from an infrastructure and architecture perspective that we can work with those platforms or be able to do so very quickly on our own without being so reliant on our major technology providers. And that leads right into digital finance, emerging technology. We're seeing a lot of buzz in the market around tokenization of deposits, leveraging blockchain technology to drive and leverage AI to do more decisioning, fraud, lending capabilities. So is your partner, your provider, thinking long term about this? And if you're looking at a 5, 7, or 10-year agreement, partnering with a firm like us to help think more holistically and see all the angles going forward is going to be critical to that business. So with that said, that brings me into what vendors are doing and making headway in the marketplace. So there are always the big three, but and they're making some significant investments too. Fiserv, I think everybody is aware, has pivoted, made some very strategic acquisitions, and they are thinking long term about the business as well, related to core, not just payments. So with the payments acquisitions, First Data and et cetera, and then recently in my world on the core side with Finxact, is definitely something to watch and consider and see how they're doing, integrating and merging these technologies together to help their clients future-proof their business and drive to a more modern-based core platform at their scale and speed that the institution is looking for. Jack Henry is doing something very similar, where they are leveraging the Banno platform to redesign and rethink core banking in general. Core has definitely changed. The definition of core has definitely changed based on these acquisitions. And when you're hearing a sales pitch from one of these vendors, it's about, oh, we're talking about more in the core strategy, but really that's by way of acquisitions and bolt-ons and integrated, and they're doing more in the core, doing a lot of bundling. Where now we're seeing a lot of that's been the past 5 or 10 years or so. Now we're seeing a lot of unbundling of the core, hollowing out the core, redesigning and rethinking core to be more transaction processing and data oriented. So Jack Henry has definitely taken that approach, along with FIS, where they've developed their modern banking platform, which is cloud native, which is interesting to watch. Not a ton of deployments as of yet in the community space, but definitely something to watch. Finastra doing along the same lines. They've been through multiple acquisitions over the years, and have 2 go forward strategies for core with Fusion Phoenix and Fusion Essence. Phoenix being a more cloud enabled platform where it's heavily dependent on Microsoft, and then Fusion Essence is more agnostic and cloud agnostic as well, with a unique value proposition and some investments that are being made in the North American market, and a few deployments to be thinking about. I'll get into more of that as well. And then there are a lot of other providers. CSI just recently went through a merger, not with a big technology firm, but a private equity play, which is seeing some significant investments, especially along open banking and better integration and scale, and DCI in the same, really driving more open. And I think the biggest theme I'd leave you with the legacy market is they have all recognized the need to modernize their connectivity with open APIs. Some of them are trying to develop ecosystems, and whether that's the right play or not is still yet to be seen. The digital banking providers are trying to do more of the ecosystem play. Not sure if that's the role for a core, but we could all be wrong. And then some are just trying to modernize their stacks and be more relevant and focus on better conversion experiences and integration experiences. But with that said, I already mentioned a few examples, but there are some platforms out there that are making some strong investments, and definitely should be watched. with some of the churn of the big three from an employee perspective, a lot of, and even not even the big three in the fintech space, but think about Microsoft, Google, and Amazon, and um, everything going on with Silicon Valley. There's a lot of technology companies that have talent that have left or they've been let go, and they're moving into fintech and moving into the banking space. So with that said, a lot of knowledge from historically legacy core systems are being gobbled up by the more challenging challenger cores out there. So these cores are definitely unique because they're agile from birth, which means they're more microservice oriented, event driven architecture, which gives them a leg up when it comes to time to market of new products and services, and the releases are a few per month rather than 2 or 3 big releases a year and having to do massive regression testing and downtime related to updates, et cetera. So it's just easier to maintain and manage because it leverages the investments of the cloud providers. It helps you move into more of an OpEx model from a CapEx model, which is a unique way of looking at the ROI. And that's what we're really trying to coach our clients on, is look at the opportunity cost and not just the hard cost related to some of these systems, because the API architecture these days is definitely more modern out of the box. So it gives you the ability to work with any third party you would like to and control your own destiny, and also provide better customer journeys and experiences because they are a component-based architecture. So there's a lot that you can do there, and happy to work with anybody offline to talk more about that. And I already hinted on the faster time to market. So a few examples of that would be, I always like to mention Thought Machine as an example on the bottom left of your screen, primarily because they have actually worked with a very large regional institution here in the Southeast to launch a very innovative commercial leasing product through, and I'll use smart contracts loosely, because not sure if that's the right technical term, but they've definitely written the policies, procedures, and controls of that product into the code line. So it's driving a lot of automation and efficiency from origination all the way to servicing, and then also leveraging a smart contract based on events that occur, whether it be balances or payments to the product, to drive more efficiency that way. And Technisys is making a lot of headway in the marketplace in the large FI space, more of an SDK model. Had a few challenges as of late, but they're thinking about the business in the right way. On the right hand side, Finxact is the one I mentioned that's actually been acquired by Fiserv, and then Mambu, Finastra, and Nimbus. Nimbus just launched with Citizens Bank of Edmond and Joe Castilla, the Roger Bank, which is a product for military recruits. So just a unique opportunity, a sidecar core opportunity there. So you'll see a lot of these systems. Don't think of them always as core systems. Think of them more as product solutions. So they're designing products that just happen to have a ledger attached to it. So you're not really having to leverage your legacy platform so much. You can have some different strategies there, and I'll get into some more examples for you with that. So in the marketplace, it's always like, yes, we know we need to modernize, we know we need to do this, but maybe it's strategic plans or the board having different ideas, or staffing levels, trying to find the right talent, or change is just hard. It's difficult. So one, you need to pick the right partners way early in advance, but there's also, it's not the only thing. You don't have to do a full lift and ship of your core platform to achieve the result of getting a modern core platform. So what I mean by that is there are other alternatives and strategies out there as technology has evolved. And like I mentioned, the churn from Microsoft and Google and some of these other techs going into fintech and leveraging, nowadays you see, new, let me back up. Colleges aren't teaching kids how to write COBOL anymore in that languages anymore. So you see a lot of new languages being coded for, and a lot of kids understanding and coming out of school doing these more modern languages. So with that said, there is a middleware strategy or a hub strategy that might be something to consider, because one, it can be a quicker time to market, and it can give you a path to a conversion over a period of time. So, and I'll get into an example here in just a minute of what what this architecture could look like. But you're really plugging in a middleware on top of your legacy platform and hollowing out that core platform. So you might be moving the GL off, or you might be taking the LOS or the lending side and going best in breed, maybe the payments piece, and you're leaving the core to its bare what it does best. And you're connecting all this into a hub approach. And what this hub approach means is that all your third-party systems can be plugged into your hub, and you have your own API manager, and you're controlling your destiny with third parties. So you would have your own API that you can expose to a third-party platform and integrate. And these actually orchestrate all the functions and have one connectivity to the core. So just imagine plugging in your digital banking, your lending, your payments, your core, all into your own hub, and your core only has one connection, and you're not having 17 or 20 different interfaces and then all these extracts and batch files going back and forth. The hub, your own hub, is actually orchestrating that. So there are options out there for community banks to leverage. And this is a solution that, some of the money center banks have been doing for a long time. Some of the larger regional banks, now it's available and being used successfully in the community market. And eventually it gives you a strategy for a core replacement at the end. And I'll tell you what I mean by that here in just a moment. So with some of these hubs, I just wanted to give you an image of what that blueprint looks like and how to actually, what a modern platform would look like in the end. Really has three levels to think about. You have that presentation layer, right? So the UI, the UX layer, that could be Tableau, Axiom, Salesforce, your online account opening platform, your digital banking platform, all those the UI layers that your customers would be interacting with, the point of sale, mortgage account opening, etc. The mobile device, other channels, chat, AI, etc. And then you have what we call the business layer, the business logic layer, the APIs, and where your data warehouse would sit. And if you don't have a data warehouse strategy, that's okay. There are other, your core is one big area for that data, but also, FIS and Shazam and others on the payment side of the business. So you can get access to that data. And these hubs help you recognize the benefit of your data and clean that up to be able to leverage it. And the goal would be for reusable APIs. So this is kind of an example. And then you can see at the bottom the data sources, the core banking, documents, payments, and then what we see here on the far right-hand corner, bottom right, is the sidecar core. That could be one of the more modern platforms or these feature-rich ledger solutions, like the example of Roger that just launched with Nimbus, doing a new one product, and then over time you start migrating over, some of your legacy business over, and you've done a core modernization over time rather than a full lift and ship of the business, and assuming all of that risk and reputational risk by doing a full core conversion over a weekend. So we're trying to help you avoid that scenario by introducing a more hub approach or a middleware approach. And a lot of these middlewares, they offer development resources so that they can be an extension of your team. So if you do have an integration need, you're not so reliant on one of the big three core providers um, and tied into their roadmaps and their timelines. And if you want to launch a new product or drive more innovation, it's on your time and your speed. Think about the CARES Act, the PPP program. Institutions that were already modernized and had, online applications, real-time decisioning, modern architecture, were able to capitalize on that very quickly and get, lending and get money out to the communities, and take care of their small business employees. And then there were the other banks that had very legacy processes, controls, systems that had to throw bodies at it, manual human capital, and having to really pick and choose who they lent to. This is just an example of, how to not have to worry about that again and be able to pivot based on what's going on in the market or based on competition. If you need to change your rates or do a new CD or do a new product, you're on your own. You control your own destiny. So the hub approach is one. You have a couple of options. You have the full lift and ship core conversion. You also have the sidecar core strategy, the middleware strategy, or the do nothing strategy, just optimizing what you have. So there's a lot of, different strategies there. And then I wanted to call out that one with the hub approach, which is what we're working with our clients and seeing a lot of momentum in that direction. Just checking my messages and notes here to see if there are any questions, and it doesn't look like it at this point. So really good. So now we want to talk a little bit about, how do we get there and what's the process look like? What do we need to be thinking about as we go through this transformation, or why work with a partner? There's a lot that goes on in a process. And, I'll say RFP because that is, the industry norm method of filtering down and narrowing down your options, and the examiners and the boards all expect an RFP process. There are other strategies to do your due diligence in a more modern way. So, really we look at, leveraging market insights and experience to help you, score and measure and develop an approach to looking at these systems. Because frankly, let's be honest, looking at some of those cloud native platforms can be a daunting task if you're not really familiar with what you're looking at, or you're not sure what the impact would be for the business to be able to do that. So we just get bogged down looking at the typical providers that we're always used to. We take a different approach. We want to expose you to more and help you, think about it and find the right culture fit, align the right vendor with you. And it may be a combination of a few vendors, and not worry about the price so much, because any firm can probably get down to a non-material difference on pricing. It's all about the right strategy. So whether that be an RFP, it could be a wow demo, really focusing in on deep dive demonstrations and use cases. It could be proof of concept strategy. But either way, there's a number of inputs that we need to consider. And then also finding a partner to give you benchmarks, right? Insights on other examples of clients who have done the same thing and reached the same conclusions, and just bouncing ideas off of you with the market knowledge of the core processing and all the related services. And then of course you have the virtual meetings that need to be, tracked and measured. And it's all about keeping an equal level playing field, right? So, and there's any number of ways to do that. And that's what we really help do. It's, you're going to get a lot of, firms or technology companies or fintechs who have really not very good products, but really good sales people. And it's hard to look past that. And then sometimes you have great products and a poor sales team. So having the right playbook and the right framework to kind of eliminate the noise and go right to the signal on what are you, trying to accomplish and what would do so is definitely key. And then we drive everything through 5 key categories when we review core banking, and that's functionality, technology, vendor, risk, and price. The risk area is really key because that's vendor risk, that's support risk, and conversion risk. You know, vendor risk is important too, because it's like, hey, they might have a good conversion process, but what next? What about after conversion? And there are any ways to alleviate that as well. Conversion risk is, um, you know, is there a backlog, or how much time do they have, or how much resources do they have to support me? What does my resource allocation look like to the project? Can I even do a conversion at this time, or do we need some assistance there to help? And then you have reputational risk, right? So that's where some of the other strategies I mentioned before, the sidecar core strategy or the hub approach, would be an ideal area if you do find the reputational risk being too high, because you can do everything at your own pace and move things over it on a more drawn out basis, you know. And there's other ways to do that, such as short-term renewals with your current incumbent, et cetera, to be able to give you some time to do that. So any ways to alleviate risk. You know, functionality and technology kind of go hand in hand. You know, we need to make sure they have the right customer experience, the right reporting capabilities, the right product capabilities. You know, we see a lot of, you know, the need, you know, commercial is definitely growing, the need for commercial deposits. You know, and you know, that flip from loans to deposits has been kind of top of mind. So making sure they have the right functionality, and then the tech stack. And sometimes that can be switched. You know, we always advise that we do a detailed discovery, and that's part of the input, but we want to make sure we understand how you're operating today and where you're trying to go, and, you know, how your tech stack measures to your peers in the competition. But sometimes we actually will do a WOW demo and just focus on, or have the vendors come in and go through their technology stack, infrastructure, architecture, and roadmaps to make sure that they can support your business for the long term. And then finally, once you find those, narrow it down to the right vendors that, you know, aren't just trying to put, you know, let's just say, you know, lipstick on a pig, or just it's legacy technology with a wrapper of, you know, a UI or a different experience around the outside of it. You want to have the right system, because again, like I said at the beginning, this is a 20-year decision, you know, with a much shorter contract, but, you know, you need to make sure you have that infrastructure right. And that aligns with vendor alignment. And then ultimately at the end, we don't even like to show you pricing in the very early stages of an engagement, because, you know, once you see it, you can't unsee it. It's focus on the right solution, the right technology, the right culture, weigh out all the risks, and then we work on the price and present that to you when we think it's ready for your presentation and for your consideration. And then you have the output, and then taking all these inputs, scoring them, evaluating all areas of impact to the business, and then rank order, positioning, making recommendations, and helping you move forward through the process. So again, just recapping, it could be any number of strategies, such as WOW demonstrations, RFP strategy, et cetera, or just, you know, optimization work to, if we just identified the risk was too high to move, but we need some more, make use of what we have rather than moving to another solution. And then, you know, I always like to talk about a little bit about how to have a successful conversion, and just some things to think about. It's easier to do it on one slide for you, but, you know, start planning right away. If you're 2 years out from a core renewal, that is probably the bare minimum to start thinking about this. There's so many number of things. If you're looking to modernize, you're going from a monolithic architecture, CIF records, all the way to more of a relational database, or even further on to the cloud. There are some things to consider with your data, and cleaning that up and getting that started. You may have 36 different versions of a product out there. Are we going to start moving all that to the new system? And just, you know, really thinking through that process. And that's kind of what I mean here from, you know, top, you know, clockwise. Be mindful of the full impact going into this. Work with a firm that can help you design a playbook, a conversion playbook. We've done this for 30 plus years. We have a lot of experience. We have a lot of partners as well, who have gone through this experience and can help you set up that playbook. And when you have that playbook, stick to it. Have strong change control processes that If we go outside of that playbook, we need to have change control processes in place so everything is measured and tracked on why we made those changes. And I can't stress enough the communication plan. Again, I mentioned at the very beginning that example of clients that, and we always suggest this, is have fun with it. Create a code name internally, a marketing campaign internally, bring food in throughout the conversion process and snacks, and just, make some gamification out of it. But that'll help with the communication and the change culture and getting everybody on board with the strategy and the buy-in that things are going to change, and regularly communicate that to the team. And then partnerships are very important. Resource allocation can't be stressed enough, and having proper resource. A risk assessment up front and early in the process would identify some of that risk, because you might need to budget for conversion or implementation assistance, whether that be a program manager, project manager, technical support, or more support from the provider, which they do offer. So that would definitely be helpful. And then have a risk mitigation plan, have a plan B. God forbid a hurricane comes through Southern California on conversion weekend, as just an example. What are we going to do if that happens? Or a tornado goes through, or a snowstorm on conversion weekend. Hopefully we plan around that. We have plan A, B, and C, but having that plan in place in the playbook with a change control process would be very helpful, and how we see institutions having successful conversions. And then define what success looks like. And that could be ongoing. I mentioned account opening and other KPIs, and hard dollars and ROI is always important, but there's cost avoidance that need to be factored in. If you're moving to more cloud enabled or cloud native system, there's incentives and rebates from the cloud providers that could be factored into there, but any number of things. But work with a firm to help you define what success looks like, so we can track and measure and support you in that area. So a little bit more. So that was, how to, put the framework around it. But if you did realize you needed some assistance with conversion and implementation, these are some things to think about. And this is unique to SRM and important to our clients, but it's not just having somebody, walking around with a clipboard, making sure you show up to meetings and hit your tasks and yell at the vendors and pound their hand on the desk when they don't do something. It's much more than that. It's program management, but with a detailed project manager. And these project managers have experience in conversions, so they're not really project managers. They can actually be more hands-on and get in the weeds with you, and have a tactical manager day to day. So the project manager will help co-manage with you that plan, provide guidance, sit on the committees, manage and evaluate the risk, and help guide you through that process. But then you need to have a tactical manager that's actually setting up the meetings and taking the notes and the meeting minutes, and measuring and working with the project manager, and then with your team, and then with the vendor as well. That's that tactical level. And then there's always a need for technical support. And that could be early in the process, as I mentioned, with cleaning up the data, getting rid of duplicates, making sure John Doe doesn't live in the system 3 different areas, and managing those relationships and how John Doe relates to certain accounts and certain customers. So cleaning up, looking at all the ancillary systems and doing a risk assessment on those. What do we need to keep? What do we need to replace? What do we need to integrate? Doing your forms review, data mapping, data conversion, data validation. There's so much that needs to be considered. And, any time in the process, and a conversion can take 12, 14, 16 months. And anything can happen in that time frame. So finding a partner that can help track and measure the program with a living and breathing risk assessment, that has the resource to kind of plug in and support you in an a la carte fashion when needed, and then be able to remove themselves when they're not needed, will help drive a lot of efficiency, and limit your exposure to risk through the process. And that's what these programs are really designed to do, is to limit your exposure to risk. And then what's unique to us too is we're moving from a legacy platform to a more modern platform. And maybe you're not. You might just be getting a legacy to legacy, but getting a better pickup in certain areas. But you're going to need new procedures. You're going to need new training materials. You're going to need new guidance there. So being able to find a partner to help execute and measure the effectiveness and readiness of that plan. You might need a technical writer, and this would just be an assistance to what you currently have or supporting you in that. So this is very important. It's unique, it's special, and it's a different approach. So just something to think about of how to have a successful conversion. And then if you decided, maybe the opportunity cost is too much to do this wrong, let's spend a little extra now and do it right the first time. We'll be it'll be a successful program. So that is all I had for you today. Again, just kind of recapping, and some things to take away would be the different strategies to think about when it comes to core banking. It's not just beating up the vendor, getting a better price. It is that in some way. Price is always an issue, but getting the right terms and conditions, eliminating exclusivity from agreements, SLAs with teeth in them, the right file cut. So if you ever did leave that provider, that what the costs are going to be, or if you had a merger or an acquisition, having future-proofing the contract and the technology is definitely key. And you might think you need to convert. You might think you need to leave or go to a whole new solution. But the middleware strategy may be the right approach, or a sidecar core strategy, or maybe just an optimization of what you have. Maybe you're just not leveraging the tools that you have because you've been on it for 20 years and you've had staff leave, but maybe just getting it up to speed and then finding the right ancillary systems, or maybe it's just a digital provider that needs to be swapped out. Either way, please walk away today knowing that there are other strategies out there and firms that can support you in that. And then also, finding a firm that can help you walk through the strategy all the way through to execution. So with that, I really appreciate your time. Again, if you have any questions or comments, feel free to, I'll sit here for a minute or so, just to, maybe not a full minute, but to look at the chat and the different Q&A and answer any questions. If not, we'll get those questions answered for you after the fact. So really appreciate your time. I don't see anything in there now. But again, my contact information is on the screen. So if there's anything that comes up after the fact, please don't hesitate to reach out. And